We're going to start today's session with a conversation with Kelly Perdew, co-founder and managing general partner at Moonshots Capital. Kelly, welcome to the show.
Thank you for having me, and it's incredibly admirable what you're doing and the reach that you've had so far.
Thank you. Thank you. So, Kelly, the point of this conversation today is to introduce you to our audience and get to know one another. So let's start by having you share a little bit about your background as well as the background of your fund. What is the investing focus? How big is the fund? What kinds of investments are you making? Let's just get to know one another.
Absolutely. Well, I'm a relatively newbie as a venture capitalist. I came up being an entrepreneur. I've been either a co-founder or a part of the senior team of 10 different companies that we started. 2 of them were learning experiences. I make the air quotation marks there, which are very valuable, but you want to avoid those if you can. 5 exits and 3 still operating profitably. I do consider myself an entrepreneur, and along the way, I started making angel investments, and then my partner in the fund now, we started angel investing together. Then we started leading angel syndicates. So we would invest our money and tell other angels about it, and they would invest with us, and we would get paid a carry. And then last October, we did a first close, our $40 million Moonshots Capital fund, and we've made investments in 65 companies over the years and have a pretty spectacular track record. And we think we're pretty good at picking the companies, but we're even better at helping them after we put the money in to help make them successful. And our thesis is focused almost entirely around leadership. My partner and I both graduated from West Point, served in the military, and it's the only place we know where millions of dollars is spent training people specifically on leadership. And that's, if you look at the success record of the 65 companies we've invested in and all the other VCs that we sit on boards with as we talk about the successes and the flame-outs, the failures, the key ingredient is leadership. And so Moonshots Capital leans in heavily when there's a military veteran on the founding team, and that military, that could be any military, it's not just U.S. military, but we think it's a fundamental training in leadership. We also like, as I think a lot of investors do, founders who have had previous successes in building companies. That's kind of the battle scars of experience.
Now, what about these 65 companies that you've invested in? What percentage of those have a military veteran in their founding team?
Sure. We have just under 15 million, 1.5, assets under management that's been deployed, right? And about 70% of that has been invested in teams that have a military veteran as one of the co-founders.
Very interesting. And what is the typical check size of what you invest in?
Sure. From the fund, we're late seed, early A, so that can mean a lot of things in different parts of the world, and or over the last 3 or 4 years, things have gotten a lot more elastic in terms of what that means. But our check sizes are typically $500,000 to $800,000 in the seed piece. We're frequently the first institutional investor. We're not the first investor. The companies have started generating revenue, approaching $50,000 to $100,000 a month in recurring revenue, typically. And we're looking to get anywhere from 10 to 15% ownership in that seed round. Of the 40 million, 17 million is dedicated to first checks in, and 23 million is reserved as dry powder to reinvest and to continue to invest in subsequent rounds in the companies we invest in.
And what is the definition in your case of late seed, early Series A? What metrics are you looking for?
Sure. So, typically there's still pieces of the team that need the A players inserted. There's a minimum viable product, as I described, in terms of they've, found a problem that they've built a solution, whether it's a product or a service for, and have started selling that to more than one client. They've raised some money. Usually it's in the $200,000 to $500,000 range previously that helped them get to that point. Frequently that's friends and family and credit cards and maybe one or two angel, external angels or sophisticated angels, or maybe it's an incubator. And interestingly enough, a lot of our deal flow comes from the ecosystem itself. So Techstars, Y Combinator, 500 startups, they're already curating lots and lots of entries to select the companies that they think could be the most viable, the most exciting. And because we focus and lean in heavily when there's a military veteran.
I think your audio went off. Kelly, I think your call dropped.
You got it?
Yeah, you're back. Great. Excellent. Go ahead.
So don't know what happened. I lost you there. So from the criteria in terms of looking at where we want to invest, it's, they have some revenue traction. There are clients that are repeat customers. There's most of a management team that's put together and they still are looking at growing and building that. And they think they found a place in the market and there's more money required to explore that further. And we like to invest where there are very distinct milestones we can see and help them achieve on the way to the next round of financing. So that's kind of how we're looking at that late seed investment.
What about sector? What is your comfort zone? What is your interest area in terms of sector?
Sure. As you might imagine, not every military veteran or great leader comes out and goes into the exact same sector. My partner and I do have some domain knowledge. I've helped my wife, who is building her fifth company, I've helped her build this fifth company, direct-to-consumer advertising and media agencies. So she's previously sold 4 of them, 3 to Interpublic Group, 1 to MDC, and then she leading and me assisting kind of back office ops, finance, HR, everything else, have helped build up the existing company to about 50 head count and growing pretty dramatically. So anything that has to do with ad tech stack, direct to consumer, what kind of newbies call, what I call, people under 30 call growth hacking, we just kind of call that's actually marketing. So anything that would help or benefit from that, I've got a pretty deep domain expertise. And then my partner, Craig Cummings, also a West Point grad, the last company that he built and sold to Daimler Mercedes was called Ride Scout. And then when they bought Ride Scout, he moved on to Daimler Mercedes M&A team focused on the U.S. So he was evaluating and analyzing, potential acquisitions and or investments in the mobility, transportation, automotive, and that kind of space. So definitely in those 2 categories, we have a lot of expertise, but we also get a lot of cyber. So both of us were military intelligence. Craig, my partner, has a lot of connectivity into and around NSA. And 2 of our first 3 companies that we invested in out of the fund have a cyber focus to them in terms of cybersecurity.
And what about geography?
We're geographically agnostic. I realize you have a worldwide audience. We've only invested in the United States, so no specification in the U.S., but we're certainly not averse to looking at things from wherever it makes sense. Obviously, and
you're both based in Los Angeles, yeah?
I'm based in Los Angeles, and my partner Craig is based in Austin, Texas.
Okay.
We have a pretty good scattergram of, geographically, we've invested like all over the U.S. In fact, our biggest check went to a company in Columbus, Ohio. So we really are agnostic.
So let's do a couple of things next. I'd like to understand, what are you really proud of in your portfolio? What's really scaling? What's looking really interesting? And And as you explain to us some of these case studies, if you will, give us some insights into your thinking or Craig's thinking in making the decision to invest in these companies. Besides the founder being a military veteran, what else have you factored into that thought process?
Absolutely. So I think a great example is our second investment out of the fund in late January of this year is a company called New Knowledge. And you might not have heard their company name, but I'm pretty sure you've heard of them. They're former Army, NSA, founders, and they are the team that identified Russian involvement in social media using bots as it impacted or affected the elections in the United States, and
wow.
have continued to. Yeah, it's a pretty phenomenal team. They've got very sophisticated monitoring and listening capability, as well as interdiction capability inside of social media environments. And the founding CEO was working with the State Department previously, and the founding COO was the former Army and NSA leader. They're just very compelling individuals in terms of creating a vision, being able to communicate that very effectively. And then the thing that I say to all of our entrepreneurs is sales kind of cures everything. And they happen to be at a specific point in time where, fake news, people not trusting what's going on in the things that they're reading in their feeds, whether it's in the Twitter or Facebook or whatever platform you happen to be, visiting. Being able to know and understand what's legitimate and what's not, what's a bot or what's a human, is incredibly important, is only going to become more so that this kind of dystopian society that we're living in can get some grounding to it. So it has a great cause feel to it.
What is the business? Is it a software as a service analytics business?
Yeah, it's a software as a service business. So think about any large company and or government department that wants to monitor and understand what's being said about them and if there are activities associated with them in the social media environment. So pick a large entertainment company that has what could be considered a controversial movie coming out. The last thing they want is to, on the day before the movie launches that they've spent hundreds of millions of dollars on, to be completely blindsided by a group that either validly or not, either with actual humans or bots, is creating a pretty negative campaign that launches the day before, a movie opens. They'll pay a significant amount of money to be aware of that happening and then potentially to take action to protect themselves. And that applies across multiple industries. If you look at people who are making decisions in the financial markets, large oil and gas entities where public opinion can have billions of dollars of impact on their ability to do exploration and R&D and that type of stuff. There are obvious applications for government entities, knowing whether or not there are potential bad actors at work preparing to do something bad.
So in a situation like this, we've had a lot of software as a service investors here. There are some trends we are observing, and I'd like to get your take on that. So the ones who are doing Series A are looking for $1 million ARR before they're willing to write a check. There are some post-seed, pre-Series A people who have their own metrics. Do you have, when you're looking at SaaS deals, as you said, revenue is the solution to all problems. So what is that revenue benchmark? What?
I said, do you agree? Do you agree that a sales solves just about every problem?
I totally agree. Absolutely. And that's what we constantly harp on here. So, yes, and in fact, I much prefer actually companies that generate revenue. Our definition of entrepreneurship is customers, revenues, and profits. Financing is optional. So I'd rather people don't get flushed with financing and forget how to be, disciplined about revenue. So So I more than agree. But what is the metric that you look for as clear validation that you are ready?
So we published that we like to see companies that have $50,000 to $100,000 of monthly recurring revenue, and which translates into $600 to $1.2 million in annual recurring revenue. And the companies that we've invested in have been at $1 million and growing of annual recurring revenue. Not all of them, but that's the rule. There are exceptions to every rule. When there's a multi-time successful entrepreneur, it depends what it is. But so, we want to see that. And now what gets interesting, though, is we have to do a whole lot with the financials typically, because your definition of recurring revenue and my definition of recurring revenue might differ. We just like to be on the same page with the definition of exactly what that is. And when you're talking about, clients that are small and medium-sized businesses, recurring revenue for them, they may only spend money every quarter, and it also depends on what vertical they're in. So being able to separate that and understand that and really understand churn, really understand the ability to do upsell, whether that's growing the number of seats or adding more features inside of that environment are super important. New knowledge, the one that I just described to you, though, is, we don't know what the kind of the upper limit on the pricing is, but $30,000 to $50,000 a month is not out of the question on a lot of these deals for that capability. So that's a little different than when you think about $6 to $10 a seat, per seat in a true Slack a la Slack type of SaaS model.
Yeah. Now, let's do another, maybe from a different sector that you've invested in, maybe a B2C or something.
So there's one that's B2C that's called Fair, F-A-I-R, and the founder of that company is a gentleman named Scott Painter. He also happens to be a military veteran, and it's the second time that I've invested in him. He also founded TrueCar, which he took from ideation all the way through to public to IPO in the United States. So in this instance, the conversation about what our decision to invest was very short. Scott called me and said, hey, I'm doing a $4 million investment on 12 free, and I'm putting $2 million myself in. Do you want any, Kelly? And I said, can I have the rest? Right. This is a guy who started bunches of, dozens of companies, been very successful. Most recently and he's very, very, very focused on the automotive space, and recently took a company to IPO to multi-billion dollars. And when they offered the opportunity to invest, you try to get in. So that's when we were running the syndicate. And so I still needed something to tell the people that might follow us. And I asked Scott, knowing that what the answer probably was, I said, do you have any materials that I could share as we, put the money in? And he sent me a screen grab of the logo. So I'm like, all right, I'm going to have to sell this on your track record. So we've invested in every round, and his valuation has increased dramatically to the point where he's now raising hundreds of millions. This is over a 3-year period. He's raising hundreds of millions on the equity side through, very, very large entities that you see playing in all these unicorns right now. And we were in, the friends and family, the seed 1, the A, and we'll probably participate in the note that goes to a Series B. He's just a multi-time successful entrepreneur who's a domain expert in the area that he's playing. He's radically disruptive, and the product basically enables you as a consumer on your phone to connect to your bank account, connect to the car that you like and, Fair, what you want to get, and lease that car, walk in, sign on your phone, and drive the car off the lot for an indeterminate lease, meaning you can bring it back tomorrow or you can bring it back in 2 years. And it's a single payment for all of those items, for insurance, for the car payment, any aftermarket things that you want to do to it. And he's looking almost at, transportation as a service, if you will.
Interesting. So he's a real expert in the car industry, or car rental, car leasing, car buying industry. Yeah.
Yes, TrueCar was radically disruptive. It basically enabled a consumer to look and see the car they wanted to purchase in their, zip code and surrounding area. How much did one of those cars sell for yesterday? Which was kind of the ultimate power when you're going. Nobody really likes going to negotiate with a car salesperson about how much the car is and trying to figure out the APR and all the other components. And he just eliminated that concern, which was very, very disruptive to a protected dealership-run industry, and he fought a lot of legal battles along the way on that, but ended up getting the company public at billions of dollars.
So let me do a thought experiment with you on this one. If this particular concept came to you from a domain expert, somebody who understands that industry very well, but it wasn't Scott, and it wasn't somebody who had track record of building a company with you, and so on and so forth. So, but maybe he or she was a military veteran, would you still invest?
So there are a lot of factors in making that determination, but certainly just because there are way more people that I don't know than there are that I do know. So we're not anticipating that even half of our investments are into people that we've already met. We're seeing literally hundreds of deals a month, and using some of the criteria and some more that I described to get to the point where we get the meeting, get to the point where we do follow-up meetings, get a comfort level and an ability to understand that entrepreneur isn't going to do what we tell them. That's not the intent. That isn't by any stretch of the imagination. More that they're open to hearing what we're saying, so that we can help them avoid a lot of the company building pitfalls that Craig and I have gone through, and the holes we've fallen in, and the walls we've run into. And if it's apparent that there's some coachability and learning and listening to what we're doing, we're much more likely to invest than for somebody who knows everything thinks they know everything that they're doing. If that makes sense.
Our audience does have some serial entrepreneurs, but the vast majority of our audience is first-time entrepreneurs, and they're, usually when you need money to start a company as a first-time entrepreneur, it's a problem. So there's all sorts of things that you have to do to be creative about bootstrapping to levels of success and metrics and revenue, so that some of the first-time entrepreneur issues get taken out of the conversation. So, which is why I'm asking you all these questions about how would you react if you were working with a first-time entrepreneur. So, switching gears though.
Yeah.
Go on.
So Craig and I, 14 companies that we've been operators in, we believe that the value we add to the investment, of course, the money is super important and you need it to build, but more important than domain knowledge, we want the team to have the domain knowledge that we're investing in. If we can help with our networks, which are pretty broad, we will do so, obviously, and that's another consideration. But where Craig and I add the most value is the empathy and experience of being a founder and the company building elements, right? So those first-time entrepreneurs, I just got to fight with my co-founder, or I need to part with ways with my co-founder. Okay, does the company blow up or not? How do I hire my first salesperson? We're big enough now that I can't be doing all the sales if we're going to scale, so how do I hire my first salesperson? I mean, the list of those questions that first-time entrepreneurs have is endless. And with Craig and I being able to apply our experiences, not only as an investor where you hear about them and you see them and you're kind of tangentially involved, but as an operator where you're, in the shower in the morning sweating out, am I going to make payroll next month? Those are things that you can't get and understand and really feel unless you've actually been an entrepreneur before. And I think that company building set of skills is where Craig and I add a lot of value to the entrepreneurs we invest in.
So last question, I know you have to run at 8:30. You said you're seeing hundreds of deals a month. what trends are you seeing in your deal flow, and what of those trends are interesting to you?
So we're seeing much more developed companies, right? So 3 or 4 years ago, we would see, I'd say, 2/3 of our deals would be, I don't want to say ideation, but, the MVP's almost done. There's going to be a market test next quarter when we launch. Now I'd say that's dropped to less than 1/3. People are figuring out, there are many, many, many ways to get that early financing.
Yeah.
And so it's almost, the bar has risen to the point where there has to be a really good reason for them not already being in revenue for us to go past that first stage, right? Like, for instance, if you're Scott Painter and it just, or you're just starting with your new idea and you're, in 2 years going to be at $1 billion valuation, and we know that that's probable because you're a sophisticated entrepreneur, that's where we'll ignore the fact that you don't have revenue yet. But because especially with software, it's so relative to how it was in the past, inexpensive to get a minimum viable product up. Distribution is less expensive so that you can get enough users in to test and understand what works and what doesn't. You really need to get to a point of into revenue, into a minimum viable product that's working with some monies raised from a whole bunch of different sources that are available to you in order to register as a serious player that's going to be successful to an institutional VC.
Mm-hmm. Interesting. And by the way, this is what we teach in our program is do not go to VCs as beggars, go as kings. So, and that absolutely requires that you build up to a certain revenue level, certain metric level with which you can have a conversation that is a real negotiation as opposed to begging for money. And I really can't move further without your money, and that conversation is not a healthy conversation. So we discourage those kinds of conversations.
The train is moving out. It's a great train. Do you want to be on it or not? Is a much better approach.
Much better conversation.
I don't have any money. I need money.
Yeah. All right. Well, Kelly,
totally
thank you for sharing your perspective. Thanks for coming, and great to meet you. And hopefully we'll find stuff to work on together.
Awesome.